As an investor, as an entrepreneur, as a trader, you got to warm up to the idea that you're going to do it wrong. The market will sometimes just be stupid and do something that you did not expect. Okay? And that might incur a loss. So the bias on a marketplace, that's very simply, are you bullish or bearish? Now you can be bullish or bearish on the daily chart, the weekly chart, and have a very long-term or intermediate-term bias. I'm bullish on gold. I'm bullish on equities. I'm bullish on whatever currency you're interested in. But for what time frame are you bullish? Because I could be bullish for 10 minutes trading in a 15-second chart, but inside of a long-term macro bearish market, and I can trade profitably doing that. So many of you are so rushed to try to get into something, you're not giving yourself the adequate time to learn how to trust a bias, and then moving past that to where the rubber meets the road, it's narrative. See, bias is rather simplistic. You arrive at that on the weekly chart. You arrive at that on a daily chart. Is the market going to go higher to an old pool of liquidity, an old relative equal high, two highs that are real close proximity to one another, and the most recent one being slightly lower than the previous? That's like key. That's where all the retail traders are going to feel real safe if they can short, placing their stop loss just above that. So I teach you to try to reach for that. And that is simply cut and dry, as easy as you can get for a bias. Whatever time frame that exists on, the relative equal highs, that's the time frame that you're bullish. Does not mean you won't have down candles. It doesn't mean you won't have down days in between where it is right now and when it gets there. But all too many times, traders see a down day when it's unlikely bullish. I'm about to list through everything out the window because it probably just reversed because we had a down day closed down 150 points. That doesn't mean anything in today's market. I shouldn't have any, bearing on what you believe is bullish on that time frame. In fact, it's good that there's down days in higher time frame charts like that, because that's how order blocks are created. The market trades above that down close candle, and it comes back and touches its opening price. And then you have a change in the state of delivery for the short term, but it's already been bullish. You see how quickly a neophyte, someone new, can get lost in the time frames and feel like, I don't know what I'm doing. The sands of time are just carrying me here and there, and I don't know what I'm doing. Why is ICP calling it bullish? Why is he looking for it to go here? Why is he looking for it to go there? Why didn't he do this and why didn't he do that? That's what we're talking about today. Narrative. See, it's not enough to know that it's likely to go up. It's not likely to go straight up every single day when you're bullish. In fact, it's unreasonable to accept. Really accept. And when you see far less like it doesn't go up, it's narrative. Out of all the books I've bought, all the authors I listen to, even people that claim to have made lots of money, even my initially, first mentor, Larry Williams, his tools, rather simplistic, but didn't really get to the core of what I was aching for. Was how do I navigate this stuff? Even if I see all the things that I had grown to trust as a brand new student of this, 1995, I had to find my way through all that stuff. Because I would overanalyze, I would second guess, I would sprinkle this and that from everybody else that I thought I was learning good stuff from. And it wasn't helping. It wasn't helping at all. Because I didn't know the mechanics of what was going on behind the scenes with liquidity, time-based delivery. And that's the crux of what makes algorithmic price delivery what it is. It has absolutely zero to do with how many people are buying and how many people are selling. And it's silly when you think about it, because you say, oh, look at the buyers. They're buying pressure. Here's how you quickly throw that into the bin, okay? You cannot get filled on a long purchase of any instrument at all unless someone took the other side of it. So there's transactions there. They're on both sides. It's funny how everybody misses the idea there. It's going up. No matter how many contracts, how many shares, how many lots are trading, whatever entity state the other side doesn't matter. It's still the same buying and selling pressure at the same time. But you'll believe the books. You'll believe the authors that regurgitate everything else the books have taught. And it's funny how you're always learning and never coming to the knowledge of the truth. You're never getting there because you're believing the lies and you're drinking from the well that's tainted. If you go in looking for things that are false, not realizing what you're looking for is false, it's flawed logic. And it's easy to grow accustomed to saying, well, this game is random. It's not an even distribution of buying and selling winners in my trading. I have to always be willing to see the market go into states of randomness. And that is other. Everything's in here. Down to the tick. Proof of that is see it before it happens. And where it trades right to a specific level, down to the quarter point where it stops. And one has to admit, either the world collectively is listening to little old me, a nobody from Middle River, Maryland, and they're all marching to the beat and drum, the Pied Piper playing, and they're buying, they're selling, they're stopping exactly where I said that level should be sensitive. Or, and this is the truth of what it is, the market should break. And they're set to that level by algorithmic price level. It doesn't matter. All of a sudden, nobody wants to buy above that tick high. No one wants to sell below the tick when it's been dropping, right where we say it's going to go to. Isn't that odd? Isn't it odd? Okay, look at your level 2 data, those that believe it. But there's still orders above these levels. Why aren't they getting tagged? Because they're not part of the party, folks. They're not being invited. You're just left outside. The 501 Club, the people that are in the mix right now, they're in there. They're moving and shaking. They're in there. They have been ushered in to the highest place right now. That's the volatility in the marketplace right now. They're in there. And you always have people that are outside waiting for somebody to get tired and go home so they can allow them by fire code to let more people into the party. They're trying to usher in. Hey, look, it's bucks, bro. Please let me slip in. I'm at my quota. I can't let by in. Think about it like that. Why aren't these moves getting that 1/4 tick past it when there's 300 buyers? 300, 500, just beyond where we said it's going to go. And it says, can't come in. Straight. See, you've never went to the marketplace looking like that. You never investigated those things like that because the books never told you to think that. Just like when you go to school, they don't teach you how to be an entrepreneur. They don't teach you how to be your own business person and pay less taxes. Get paid to spend the money that you made through your business and then pay less in taxes than somebody that makes even more than you in a salary job. You're going in ill-equipped, ill-informed, uneducated, and I'm raising my hand right now because that's exactly how I started too as a 20-year-old. In 1992, I absolutely had no idea what I was doing. Zero. And scared. And every time I went in and I was buying, I really didn't know what I was doing. I was very anxious. I could not afford to lose any money. And the times that I was wrong, I didn't understand how the market was going to come back and take the sell stops. Anyway. All right. Here's the I'm thinking, okay, I'm going to wait for it. Yeah. That was the finding my way initially to understand the concept of a narrative. Because I was a perpetual fool. Not because that's better than anything else. Not because Larry Williams said so. Not because anybody else I was reading the book from said it's just the only way to make money to go along. Remember, I was trading commodities, grains, cattle, lean, live hogs. Think about it. Those markets are not just like straight up or straight down. They're all over the place.